presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
Great.
I appreciate the growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
The Tom O'Brien Show. I hope you all are having a fantastic day so far. Let's take a look at the SPY. Okay, you're trading off about 0.13%, a little bit of improvement off that 537 kind of low for the day. Take a look. You started off kind of strong, right? Futures are green, opening was green, and then right around 10:15, you get this pretty significant dump on some pretty decent volume. Again, low tick right there as well on some good volume, and we've just kind of slightly declined throughout the day. Again, potentially important to note, continuing contraction in any kind of volume right now. Very interesting. I was looking back as well, because a lot of this, what's been going on, kind of reminds me of 2022 as well. I guess I'm on a yearly. Even this point is great to look at. You have a high volume low right there, yeah. And just not a ton of volume, kept moving up. But even in 3 years, if I can get back to it. Okay, this will be annoying. We have stuff to go through. I will pull this up once we get through all of our guests today, but I don't want you to watch me drag through this entire thing. But point being, you've had moments where you get some very violent, high volume movement to the downside, and even movement back to the top, retracing those kind of levels on low volume have not necessarily proven to be negative, right? Meaning, it doesn't always mean it's a fake movement to the upside. Definitely, I think people are still somewhat concerned about a lot of U.S. equities and how tariffs will affect it, how liquidity in, just the global economy, or rather, the lack thereof, will affect this. Of course, the M2 supply globally has increased since everything kind of unwound. But I think that's getting used for other things, not necessarily going immediately back into treasuries and then overflowing into equities. Of course, you are getting some decrease right now in the 10-year yield, which is nice, trading at 4.33%, so out of that 4.4 kind of purgatory area. So you have the SPY trading off 0.17% at 538. You have the composite trading off about 0.09% at 16,814. Dow Jones Industrial, pretty strong above 40,000, 40,406, trading off 0.29%, with the Russell futures nearly flat right now, off about 0.04%. Dollar ticking up just a little bit. You have crude oil coming down slightly, but we're still up in that 61 area at 61.45. Gold contract, again, ticking up, 32.47. Very strong asset right now. A lot of people moving money into it, especially with perceived or potential sovereign risk within the U.S. on some of its debt. How long that persists remains to be seen. I think a lot of the debt selling was just people kind of unwinding. Besson even kind of brought that up and said it looks like we might be done with that for now. As I was bringing up last week, we'll have to see how the 10-year, behaves after that. You're initially getting kind of like a dash to duration, and that ended, and you get movement into gold, and you're getting some buying in treasuries, even T-bills as well, but, it's still kind of a hectic environment. And then copper off 0.12%. Some things that are interesting to see, which does make me feel a little bit confident about some of the buying, is things like CrowdStrike, very integral companies that are not going anywhere, up 4% right now, trading at 393.62. The stock has done phenomenally since the major sell-off. You had a low right there of 300, and then a nice retracement back to 400. This comes simultaneously as things like, Tesla aren't seeing tons of roaring to the upside, right? This tends to be much more of a meme retail stock. And then, of course, things like Lucid. Basically, long story short, it's nice to see that you're not getting massive rallies in meme stocks or, kind of highly speculative growth stocks, whereas you are seeing some investment into stable, still growth stocks, but that maybe have a bit of a clearer path forward. Well, it is a Tuesday, so you know what that means. We are joined in the first couple segments by Basil Chapman. Basil Chapman is the author of the Opening Call newsletter. He has been on the ball updating this as the markets start to turn or go to the upside. And of course, he is in the den as well. Strongly recommend checking out the Opening Call newsletter. You can do so risk-free, of course. We have a 30-day money-back guarantee for all first-time subscribers. So, you don't have to worry. If for whatever reason it doesn't work out, I'm betting that it will. I read Opening Call every morning, and it helps me out immensely. Basil, how you doing?
Hi, Jacob. I'm well, thank you. How are you?
Yeah, I'm doing well. Not so much action maybe this week, at least in volume, but I'm interested to see kind of what your comments are, at least in the moves on the chart.
So let me just review. So we had the DXD, which is 2 times short the Dow. It ran up to a peak F and then turned down. So we had really good profits and we got out of that. SPXS was the one that's 3 times short the S&P. We were in at 580 and we're getting out all the way to the 1014 area. The high was 1067. And then early we actually did buy the exact day of the Dow, just got stopped out, and we got back in last week. So that we're looking at, there are a couple of indicators. Let me just show you here. So this is something I always use. It doesn't always work, but if you learn the patterns at a certain point, it really helps a lot. So you'll see these vertical lines happen to coincide. This is the on-balance volume. This is the late Joe Granville's concept. I think in the end, I think he did see it computerized, but he used to do it all by hand. Years ago, he used to do it by hand. What you do is you add up if it's an up session, you add it to the total. If it's a down session, you subtract it. It's as simple as that. But once it looks as a chart, when you've got it, it's just much easier to see. So I wanted to show you that this low that was made, that was on the 7th in the Dow, coincided with the on-balance volume, just making a little V-shaped turnaround. And in the other technique that I use, which is something that I developed a long time ago called the Chapman Dark News Index. Basically, this used to look at the interest rates that were kind of very important. They created the tops for a long time, a couple of years. But the most recent one, it actually was really in December, then again in January, said that I talk about internal high and residual high. It's like an earthquake and an aftershock, which can be much less than the earthquake, could be greater than the earthquake, could be the same. So I looked at that as an internal high and a residual high, and we started to come down. And I then said, this looks to me like an internal low, having held this very long-term Chapman Wave inside track little mini channel support, and then it ran up on the 13th of January, and then it turned around. But I called that a residual low on the 36,611 on the 7th, and we can go from there and we'll see what's going on.
Perfect. Well, Basil, can you stay right there?
I can.
Folks, stay right there. We'll be right back with Basil Chapman after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show, joined right now by Basil Chapman with the SPY trading up, flipping green up 0.01%, composite up 0.08%, flipping green as well, and the Dow improving. Basil, before we went to the break, we were looking at this dark news index regarding movement in the Dow.
So, yes. So now what we've seen is a really strong rally. In fact, if you didn't know about tariffs and all, first of all, I think that the tariffs exacerbated the move to the downside.
Yeah.
This area here should have been, the 40,100 should have been really important support, thinking that from November to December, we've been talking about the overbought condition in the tech sector, that they should need to come down. When they come down, will we see other sectors start to rally? So that to me was an aberration. And now we're going to see something very important. Why? Because I look at double tops. Look at this double top in the Dow in the weekly chart. 45,073 back in 2024, and then just a couple of months later, 45,054. Just misses it, pulls back. Look at the S&P. Actually, you were talking about the SPY. Let's just go to the SPY. Look at this, the SPY. If I can type it right in the right place, right there. Yeah, the SPY made a high of 61.13, but look at all these highs that were made, this triple top. So I look at that and I think, okay, take it seriously, because you can have a pretty serious pullback. Well, the Dow went by a fraction today to the 40,791 level, which is just 20 points off the last high 5 sessions ago. So I'm watching this very closely. Why? Because the 9-period moving average is still under the 14. It's got a long way to go to turn green, and we'll probably see the Dow 41,500. We'll start to see something improve quite a great deal, but that's what we're waiting for. But the MACD has turned up. Stochastic's still weak, but it's rallying. So to start off with, I think that this is a very important week, just in terms of, I want to see where we close Friday. I'd love for the Dow to close. I don't care what happens in between, but on a close, actually, I should say even intraday, somehow or other, if we can get to the 41,350, 41,400 area, I think that's going to be very important, just in terms of my work. Then the other thing is, I mentioned to you that there are two, and I'll go through this again in my show, the Tiger Technicians Hour tomorrow. I look at this, and I'm showing you here the pink is the XLF financials. This is a monthly chart. The blue is the S&P, and we had an exact move from the low that was made in 2020 to the high that was made in 2022, and then a pullback, and then an exact move, almost to the penny in the financials, going to the recent high, and the move down over there from 2022 into late 2022 matches exactly where we were on the low just recently. Now you've had a pretty good rally, and I think that's the reason why I'm saying this is different to any other consolidation in the market that we've had, because I just don't see crash material here, because you've got so many areas that have been rallying very strongly. So I look at this and I say there could be a choppy phase going for quite a while. But at the same time, if you're just looking at the charts, there's been some really positive action. So it's important that the financials, and Bank of America came out with good earnings today. It's up $1.43. We've been in for a long time. We're still long Bank of America, taking quite a bit of profits, but we still have a core position at the lows. So this to me is very important. If the financials were tanking right now, I'd say, this is your normal big move to the 22%, 25% to the downside. At this particular point, I think that we have something, there's a saving grace. I mean, if you look at a Johnson & Johnson, this is the defensive area. Look, it's not great, but it's holding well.
Totally.
And these would be tanking as well. So it seems to me that you've got to be very stock specific, and we've tried to do that. We've managed to keep all our core long positions, even though we've taken some good profits from them. But most importantly, look, we're still in the gold. We have the PHYS, that's the physical gold, which matches exactly the price of gold. Gold is just, for 2 sessions now, it hasn't, isn't that unusual? It hasn't made an all-time high, but look where it is. It's holding very nicely, and the technicals are still very strong in the daily, the weekly, and the monthly. And what's interesting also is that Bitcoin, which could have suffered quite heavily here. Definitely. Yes, it's come down from 110,900 down to the 74,000 level. It's right now at 84,000, but we are still long this. We've been long for quite some time, since about September of last year. So I think that you've got to be very specific in what you're looking at. And there are areas that I've been following very closely over the last week. And I think we have a chance that if you can get into certain stocks that have not tanked with the market and are holding very well, they tell you that they are survivors in this particular phase. And that's what we're trying to do. It's to go for the stocks that have held well, and that independent of even other stocks in that area are doing their own thing. And that's a real challenge, but I like that kind of challenge, and that's what we're focused on right now.
Absolutely. No, and to that Bitcoin point, I mean, I've been thoroughly impressed with Bitcoin. I mean, you're right back now just to around that kind of Trump bump, and it's held at 80K. I mean, yeah, of course, it's dipped below it for a few days.
Yes.
But I mean, it has rebounded right there. I mean, there's strong resistance at support at 80K. And then even Palantir, right? I mean, even before what we had on April 7th, that major sell-off, I mean, the thing, as everything was cratering back down, right, to November levels, this thing has held substantially well. I'm looking at a yearly and a day on the day. I mean, It has that really strong 80 support as well, and good news.
And it's in an area that could be beneficial.
Big time.
And I'd even say specifically to Palantir. Maybe not some of the others, but to Palantir. So you can see right here, it's just bumping to this resistance. It's at 98.5, and I think that it is in leg B. And I suspect that if this can get to, as soon as it touches 100, I think that it's going to start to move even sharper. So yes, I agree with you. So it's, as I say, stock specific. You don't have to. We're not overbuying. We're not putting a huge amount of work. We've built up a huge cash position. Yep. We're starting to put it to work. But I also say, let the market tell us at this particular point. As I say, if I have just a moment, I'll show you something very interesting. Let me get to it here. Is that the chart? Yes, this is the chart. Look at this chart right here. Looking at it just purely with the techniques that I use, this is the 914. When it goes green, it's positive. When it goes pink, it's negative. When it goes, and here's the MACD and stochastic. But look at this. Here's the Dow. It hasn't been able to go, the pink line hasn't gone positive to green. So I've got to have a little patience. Yeah. And then the resistance will be at the 200 period moving average of 41,800. So I think it's really important to treat the market with respect. Anything can be said at any moment. You got to be that. You got to be aware of that. But here's the stochastic in the just cross positive. The MACD's cross positive. The stochastics improved a little bit in the S&P, but that 9 is refusing to turn green. When it does, that's going to be very important, and it goes for each one of these. Look, here's the QQQ. That's the NDX 100. A little bit better in a way, but still pink. And here's the IWM. So it's very important. Look, IWM isn't doing very, and as we finish, I'll just show you the SMH. It's really important. The SMH semis move, and they are just stuck. So I want to see a good 3 to 4% move in the next 3 to 5 sessions in the market. That'll say to me, that's important. That's a very good sign.
Basil, thank you so much. We'll see you tomorrow at 10 for the Tiger Technicians Hour.
Thank you very much, Jacob. Have
Folks,
a good evening.
check out the opening call. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. Jacob Shoup watches the Tom O'Brien Show. We're going to have Tim Ward on in a moment. While we're getting him set up, I don't really want to look at SMCI, but this is just what I've been following. it is unfortunate to see what kind of happened with this company. So much potential, and it's just not getting, the love it would get if it weren't super sketchy. Man, ARB. I'm getting distracted now, but ARB, man. We remember looking at this thing. This is a Malaysian server IoT AI company, up 43%. It does this thing quite a bit, right? This was on, I believe, similar news, right, where they're providing AI data center server solutions, right? This is one I'm very interested to look into. I remember last time we were covering it, which would have been, maybe November, if I remember correctly, maybe a little bit earlier than that as well. This was trading around about 38 cents. Maybe 40 something. Regardless, they didn't have a lot of information, right? Now, we definitely have to do some research on ARB because that is always kind of sketchy when it's a newer kind of company, especially coming out of somewhere like Malaysia, which of course, great country and everything. It's just you have to do a little bit more digging to fully understand what you're doing. But if they can provide these server solutions and their margins are very good, which I'm very interested to find out if they are, it's kind of difficult for a startup like this. Then this might be a nice play. So we will see. On top of that same kind of deal with these little companies ticking up, one that I'm not so psyched about is USAR, up another 16.6% today, trading a market cap of $1.12 billion. Again, not a lot of cash on these guys. Again, not a lot of debt, but we'll see what happens. For this, there's a lot of growth already priced in to USA Rare Earth. Okay, we know China is not exporting any of the rare earth. We know that China is expanding its chip manufacturing capabilities, dumping a bunch of money into it. This, of course, is the new arms race in a major way, regardless of what people tell you about, the need for the data centers, all that kind of stuff. Now, one that is very interesting is ARRNF, American Rare Earth. So this is an Australian company, but they're operating out in Wyoming. They seem to have some pretty promising, they're still in the exploration phase, right? But they have a bunch of land they have not explored yet, and they have hundreds of millions. And this is after considering, parts per million in the earth of rare earth elements. They seem to have a ton of actual rare earth oxide in there. So that's one that I'm interested in as well. Of course, this is OTC, so keep that in mind. But 19 cents, not even registering on the market cap. I was reading a lot of their report earlier today, right before the show. I want to do some more digging, but this one's very interesting. I think Trump's whole thing, again, national security, right? With shoring some of this stuff. And again, we saw the need for this kind of stuff, or at least how important it was during COVID, right? It's not even necessarily something I'm opposed to, right? It doesn't mean I support the methods that are being employed, but whatever, okay? Point being is there is action moving right now to shore some of this production. So very interesting stuff, yeah? Take a look at Rocket Lab as well. They, of course, are getting some good kind of exposure. I believe they just signed a deal for ICBMs, these hypersonic missiles. So be interesting to see what happens with Rocket Labs. All right, let's move over right now. We're going to go to our browser and type in ord-oracle.com. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. Check out his website. You get his newsletter, his book as well. You can go to TFNN.com. Go over to the services tab. 2 fantastic webinars from him. That's the secret science of market tops and 6 secret ratios every trader should know. It's just been an interesting past couple of weeks, and even though there's not a ton of action, I feel like the volume's kind of low. And if I remember correctly, Tim and I were kind of speaking about an event where that occurred. Tim, how are you doing? Can you hear me, Tim?
Can you hear me?
I can hear you now.
Okay, then let's begin. So we keep showing this chart. This chart looks at the bigger trend. The bottom window is the 10-day or actually 100-day trend. Anything around 1. We're at 1 right now, and it's a bearish situation. I put it that way. All the red lines going across this chart are times when the 100-day trend is down 1 or lower. So it was kind of a bearish sign back, it looks like about January, and turned out to be correct. So that's a bigger trend. Look at the smaller trend. This 10-day trend on top here is at 1. It needs up to around 1.2. So that's not in bullish configuration yet. So that anything around 1.2 and higher suggests panic in the market. Panic only comes at bottom. We actually are 1 right now. If you look over here, and that's neutral. 5-day trend, kind of similar situation. It's 101. The 2-day trend is 0.79. That's kind of leans bearish. The 3-day trend is 0.77. That leans a little bit bearish. So we really don't have any panic in the market yet to really establish an immediate term bottom. So, but there's some promising signs here going forward. This is one of them. This is the advanced decline with the 5-day average, and it gets down below 0.7 and rallies to 0.3 in 21 days or less. That's a bullish sign. And I went back, this looks like about 2021, and I marked the times in this shaded pink area where that ratio did go below 0.7 and rally to 3 or higher within 21 days. If you notice, they kind of cluster here. Yeah. This is the last 2022 bottom. And they all kind of came at the same level. Here's the bottom here. It turned out to be correct. We had one back in January, and I think the market would have been fine if the tariffs weren't announced. And the tariffs came out, and the market plunged, and now we got another one going along. So I'm thinking, even though January didn't anticipate Trump doing the tariffs thing, which I think caused a decline, we're probably in a bottoming process. And sometimes the market can go like back in like 2022, kind of flip sideways here. And I think we're making a bottom, but I think we're going to test the last low, which is last Monday. Mm-hmm. But this is a bullish sign. Went from 0.7 all the way up to, we're still at 4.69 right now. Anything above 3 is bullish. Yep, I'll hold.
Yeah, please. Folks, stay right there. We'll be right back with Tim Ord after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, watch the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Tim, before into the break, we're taking a look at some movement in the trend, at least. Some potential bottoming patterns here.
Yep. That's what I'm thinking is going to happen here. I think we're in a process of making a bottom. But, if you look back at 2022, you went sideways, most of the year. But, this built a lot of energy. The trend got way up there. And, this is the first sign, especially when this reading got up around 4.5. So it's definitely some buying pressure there. So let's look out where we may go. This is, we're just blowing this part up right here.
Yeah.
Which is that. All right. So, anyhow, we got a buy signal on this day. And if you notice how high this volume is compared to what it was back here, this is probably a selling climax. Volume, tripled compared to the average daily volume going back to February this year, February. So that's exhaustion to the downside. We did have a sign of strength, which is basically this day right here. That's a sign of strength. He came off the bottom. You want to see a selling climax right after it. You want to see a buying. This turned out to be a buying climax, and so buying climax is the bottom support and the top is resistance, and I think that's where we're going. If you look at the trend today, we're 1.22, and quite a bit of the day today we had downtick readings. So I'm thinking we're going to take a shot at this high right here. And I bet it's going to be resistance. We're not going to get through it because the 10-day, 21-day, 63-day trends are not up to panic levels. Suggest this rally could keep going. So we're going to probably back off. And we'll probably hit that zone, go back down, and test this low right here. This low right here, which is basically the highest volume day of over the last several months, looks like.
Right.
So we're going to probably test that. And to get through that low, volume's going to need to equal or higher than 250 billion shares because that's approximately where that volume is.
Yeah.
And that's probably not going to happen.
Yeah, right.
So anyhow, we're going to go down there and test. I'm probably going to end up with a bicycle somewhere around this 480 area.
And on that point, right? Like, and I know we're on a holiday, we're short week and everything like that, but I mean, the volume has been paltry the past few. I mean, today it's looking to be even less than it was yesterday.
Yep. Yeah. It's going to get lighter as we go into probably Thursday.
Yeah, sure.
And probably Thursday we're going to test with last Wednesday's high.
I'm thinking so. Yeah.
Yeah. If you go if you go up into a holiday, that's usually a bearish sign because volume drops off. And if you hit a high during the holidays and volume's light, you're going to come back next week. And if you're going down into a holiday, that's actually bullish because volume's going to drop down as you get into the holiday. And light volume highs, tests of previous highs on a lighter volume is bearish. Tests of previous lows on a lighter volume is bullish.
Sure.
So I'm thinking we're going to be, but that's a heck of a move. We're getting real quiet. This is quiet before the storm, I always say.
Yeah.
Because when it's quiet, you got a storm coming. When it's really high volatility, you're going to change back to low volatility. But we're probably going to test this high right up in this range here to give or take, 550. Probably can't get through it. We're probably going to go back down to 580. And you go back to this chart, if this thing goes back down to 0.3 again, and we come off this next high with another sign of strength again, then we probably got a doable bottom for a while. We'll see how that happens. But I think we're probably looking at the lows. I know this chart's getting really messy with all these red lines, but I'm thinking this low of 480 is probably pretty close bottom of the year.
Okay.
Is how I'm starting to look at it, because you had a selling climax right after it. You had to become a buying climax. And those are the type of things you need. If the market didn't have a buying climax coming off this last low, then that would set the tone for more downside. But that didn't happen. So, and that's, we got a good 10% drop, because this day right here, that's the day we actually traded, was 9.52%. So this is about 11% drop to get back down to 480. Didn't do the math, but it's going to be quite a drop. Scare everybody. And you want that trend to get up to around 1.2 or higher on that pullback. So hope is really scary, because scary is good. Panic is good. So, well, we'll get that or not. We'll have to wait and see, but I bet most likely we will. And there'll be news about something.
Sure.
It always is. So let's get along to the gold market.
Absolutely.
Here's a bigger trend. Keep showing this. This is the chart goes back to 2010. Bottom window is GDX cumulative up-down volume. Next window higher is a monthly GDX advanced decline cumulative. Gave a buy signal March of 2024, still on a buy signal. Higher highs on this indicator showing the internals are getting stronger. Uptrend is intact. It doesn't try to pick out all the wiggles in the market, but this trend is going. So I'm still actually thinking we sold out of our long position Friday, and because I think we're going to get a decent pullback. But anyhow, the bigger trend, just saying, you want to buy that pullback. Here's internal strength of the market. This is the 50-day average of the up-down volume. I thought we might go sideways here, kind of just for this indicator to go sideways, around the plus 10 area. I think that's probably what's going to happen. But here's the reason why we sold. Whoops, let's go back here one more. This is the reason why I sold our GDX position. This is GDX going back to 2016. It's kind of a rare signal, and it's a monthly chart. And every time you get, actually it's 50% above the upper Bollinger Band. This time around, we got 80% above the upper Bollinger Band. The market consolidates. And that's the reason why we got out last Friday. And it's still up there pretty good. But this is the reason why it's a pretty, even though it's a kind of a low-tech indicator, it works really well. And so we're looking for a pullback to support around 39, which is basically the previous highs. So if you look at the smaller, so we haven't shorted, we're just going to get out. I don't know if the trades, but here's the shorter pattern. This is 3 drives at top pattern. You have a high here, you got another high here, and you get a high here. But what's important, how to identify this pattern, is on the pullback of the second high. It has to increase in volume. It has to be at least 61.8% retracement. If it meets those criteria, which it did, there's the volume. And actually, we kind of had a selling climax here on this day right here, because the volume just skyrocketed up. And the next day was a low, and then now you had a sign of strength up to new highs, but this is the third top. So you got to remember, way above the upper Bollinger Band. So this 3 drives to top, 3 drives to top pattern predict the market will pull back to where the pattern began. Well, the pattern began around 39, which is basically support. So the market, if you can read all the indicators, it works out pretty well. But that 39 is going to be a great buy, because all the monthly charts on the bigger time frames are up. So this is just a shakeout and an uptrend. Matter of fact, the book says 3 drives to top patterns are usually not long-term topping patterns. They're basically in a timeout and an uptrend. So I think that's what's happening here.
Fantastic. Do you have any other charts, or are we ending on the GDX?
Say what?
Do you have any other charts?
Nope, I can hang on for another couple of minutes if you want me to.
No, that's fine. We'll see you Thursday. It is amazing, Tim. You've been calling this GDX for so long. And we have paid in droves. Thank you. We'll see you Thursday, Tim.
All right.
Sarah?
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Yeah, seriously, it is amazing to see like that trade play out the way it did. Because even, when Tom would interview Tim, both of them were huge on this play, and it ended up working out in this way, and it's just beautiful, right? And I mean, they called it back in 2008 too, which is insane. I loved listening to stories from Tom where he would tell me, I don't know, they're very interesting. Just tell me his kind of his trading journey, especially with gold miners as well. So check out the oracle.com. Great stuff. Newsletter and the book is there as well. Of course, you referenced the book. Man, we've been chopping back and forth today in a serious way. This light volume does bother me, exactly what I was talking about with Tim. It's late for the week. There are some things that I think people are kind of sneaking into, which is positive with things like CrowdStrike, Palantir. I mean, man, I'm telling you, I really do think with how well this equity is held up, and look, you're about to hit 100 here at 98, 99, right? With how well this equity has held up, I mean, it just, the sentiment is there. Regardless of what I think about the price to equity and stuff like that, I mean, they did not really get shaken out the way you saw in other equities, They They sign more deals now. NATO, of course, is a huge application for them. You know, I think about, too, with the EU trying to militarize, which will be an interesting kind of thing. I mean, what do they have that's even close to Palantir? And believe me, I asked myself that question the other night, and I was staring at the computer for hours, and I couldn't really find anything that's anywhere close to the way that Palantir services the U.S. military. The more I listen to Alex Karp, I think he's a little unhinged, but I kind of like that in a CEO. He seems like he, you know, is about the country in a major way. The extension into vibe coding for the common man that Palantir wants to service, I think, is another beautiful thing. We'll see what happens. Folks, thank you so much for joining me. We'll see you tomorrow morning with Tommy O'Brien for the Morning Mark Kickoff at 9 a.m. Take care.
Building wealth trading in the stock